However, that doesn't necessarily help them much. It really limits them to specific locations that are local to them.
Okay. And so let's talk about the differences between, further about bankers and mortgage. What are some of the fees associated with each? And how does that affect your mortgage and your closing costs and things like that?
Yeah, a lot of times if you go to your local bank, they'll have advertised mortgage rates that they just send out a rate table every day, and the rates are the rates. There is no negotiation. They don't really shop around. You get what they post. Their fees are typically fixed, everything else. You know, they'll always advertise teaser rates to try to get you in the door. And, you know, when you read the fine print, you find out, hey, you got to do 50% down, or you have to have a 780 credit score, or you got to buy mortgage points to get the rate they're advertising. When you work with a mortgage broker or mortgage lender that's local to the area, a lot of times they don't do that phony baloney advertising. You call them, you tell them your credit profile, they'll give you a honed in rate. Anybody can pay to get a better rate, so a low advertised rate doesn't necessarily mean anything for you as a client. You always have to look at the rate, and you got to look at your costs and compare them side by side. Brick and mortar locations tend to charge more for their mortgages, and their rates tend to be slightly higher because they have all that overhead we discussed earlier.
All right. I don't know, I had a question on there. It's gone.